Welcome again. This video will be mainly about roof and floor, or floor and roof, anyway you want to set it. Roof and floor, floor and roof. I was supposed to do this video a good while so you guys can have it, so you can look back over it and say, yo, this is where me I go wrong, that is where me I go wrong. Because not for the time with the on Zoom calls. Fully understand, say, yo, me kind of move fast with some people. Reason I move fast more is because I'm doing this on a day-to-day basis with a lot of people, back and forth, back and forth. So it become a bit more easier to explain it. So I end up I move faster and faster, not realizing that at first I do it with a person, or the second time I do it with a person. Yeah. So many if you kind of go so, but this video you will have this video so you can go back over it and see where you go wrong, where you miss out. Replay it as much time as you need to get it, because this is the main thing I use for US 30. As you realize, if I go back on my chart, you realize, yo, this is all me use. All these red lines here is a roof or is a floor, or is a major roof or is a major floor. So it's not, these lines are not like support and resistance line on a full scale but on a smaller scale. So let us go over this real quick and find an empty area. Alright, so the market moves in three directions. The market goes in an uptrend, downtrend, or as some people say side trend, but consolidating. Roof and floor only works, when I say only works, it only works for when the market is in an uptrend or when the market is in a downtrend. Typically, I normally use roof and floor to get my second, third, or fourth entries, depending on how I'm trading, and depending on how I'm trading, and depending on my lot, my capital basically. You see me? And it's also a good way for kind of mixing different lot size and get more out of the market in one push than trying to enter the market big at first point and not knowing what to do. But let me draw this real quick. We're doing the uptrend first. Arrows here. Let's lock the tool. All right. First and foremost, let us draw an uptrend. No, this is an uptrend. So please write this down. In an uptrend, it is you make an entry when old roof turn new floor, or better simplified version, old roof turn new floor. That is your entry. This is your entry piece, and I'm going to leave it here for you to take it down. So this is your entry piece when the market is in an uptrend. And if you do not know when the market is in an uptrend, please exit this video. Do not go any further, because you're going to be confused on where to do it on the charts or whatever. Alright, so to identify the roof and identify the floor, it's very simple. All of us live in a house. If you don't live in a house, I'm really sorry. I don't know what to say to you, but keep working on getting that house. You see me? Alright, so on a typical house, you have the roof, which is the top of the house. If your roof at the bottom of the house, then me no know what kind of hurricane or what kind of earthquake turn over your house. But anyways, um, the roof is at the top, and the floor is at the lower part of the house. Roof and floor. So right there, and then you understand that your roof is at the top, floor is at the bottom, lower part. My apologies. Um, so going back onto the perfect chart, this is a perfect chart, guys. So please be reminded that while the market is moving, it will not, you will have, you won't have a lot of times that you have a perfect market, but you will have perfect markets. I've seen it before. It happens from time to time if you are there to see it. But you will not always have a perfect market. So yeah, you have to learn how to kind of adjust yourself as it relates to how the market moves. If you only can trade one way and you can't adjust yourself to the market, then you're going to have a lot of problems when it comes on to trading. Anyways, identifying the first roof. So this is the first roof. Let us call it first roof. Or let's call it new roof. That's better, new roof. Even though this is the first roof of it, let's just call it a new roof because there's a lot of old roofs before this. But anyways, new roof. Then we're moving on. The market moves and come down to here, and this creates a new floor. So when this creates a new floor, the market stops here, continue going up, and it comes up here to create a new roof. So what happens to the new roof, the previous new roof, is it becomes an old roof. Oops, let me delete this. So what happens here, it becomes an old roof. So now the market is moving down. When the market moves down now, it comes to this point. Sorry about that. Forgive me. I forgot to take this off of auto. Yeah, that looks better. So what happens now? It comes down and it creates right here a new floor. So this creates a new floor right here. So what happens is that this now becomes a old floor. And as the criteria for the entry states, you make an entry when all roof turn new floor. And to better show you where this happens, you normally draw a box to outline an area, or you can even draw a line to outline just a single price point. So if we're going to use the line here, it's going to show that it's almost perfectly intact here, but there's scenarios where it will not be this perfect on the candlestick chart, and the wicks might be the only ones that are touching this line. So the best way, or the best thing to have in mind, is that just like support and resistance, you have overlap, you have gap, and you have touch. The touch would be a stronger, it's basically the strongest confirmation to state that, yo, this is a roof and a floor, this is a major support or a major resistance point. So that is another way, but not another way, that is another way to look at it when you don't have a perfect market. moving up from here, this would have been your first, right here would have been your first entry. And we were going to draw a line here. So when we draw a line here, we can set this line. We can set this line to be blue. Since we already used the green line already here, let's use this as a white line. Right? So initially, your first take profit area should be here. This should be your first take profit area. Reason being, this area is assured that the market will go back to this area. No matter where you take it, the market are gonna go back to that area. So we put this area in like a purplish bluish color. So up here would have been your take profit point. Let me TP. Let me put the words here so you guys can see what I'm saying. So this would have been your take profit area. So your take profit area right here. All right, so your take profit area now. So with this now, with this method, you are able to get a TP area and you're able to get a stop loss area from your first entry. Your stop loss area should be a little bit below where the new floor was formed. So this is where the new floor was formed. Let's put this into red. Stop loss. So right there, and then we have a stop loss area here. Stop loss. Now let's put this to a nice red color. So right here we have our stop loss. We have our stop loss. We have our entry. Our entry. So stop loss, entry, and take profit. And that is it for the uptrend. So with this now, as the market moves, what you can do as the market moves is that once it reaches closest to this take profit area, you can adjust it or open your take profit area so that when you can adjust the take profit area and bring the take profit area higher, and once the market comes back down to this point like here and does another new floor here and goes back up, you can set your stop loss for this area. So it's the same scenario for here also. This would have been your stop loss area. This would have been your entry area. And up here would have been your take profit area. So right here on the market, you have multiple entries. You can have one entry here, you can have two entry here. And you can say, yes, your stop loss is tight. You know what to do. The reason why you need to set the stop loss tight is that once if it breaks the stop loss, it simply means that the market is more than likely doing a full-on reversal. So you do not want to be in that reversal. So it's better to lose a little bit of money from now than hold a trade out till it kicks you out completely because of lack of margin, or it just on a whole brings you down to some decent amount of negative numbers. So you don't want that. You want able to come out of the trade before time. So that's why we set our stop loss here. So we know that we are always in the right. If it breaks this point, it means that we should not have entered for a buy here, and we now should look out for a sell here. Further down, I'm going to show you some scenarios as it relates to what are the different things that we can look out for as it relates to if it's a full-on reversal, what are we supposed to do then? Or if it's a full-on continuation, what are we supposed to do then? Well, if it's a continuation, this is what you should do. Find another old roof to a new floor and then make an entry. Alright, let me take a screenshot of this so I can add it to the group. Oh, let me adjust these. This should have been first TP. Let's put first TP. First entry. This should be first. So this is second. What was this again? Second stop loss. Um, like I'm mad to just type out the whole second. I'm not sure why, but second TP. I feel better typing out the whole thing, but I was trying to save time. Anyways, second entry, second TP. So this would have been everything basically for the uptrend.